Good evening, ladies and gentlemen. Welcome to this week's War Room held by yours truly, the Iron Clerk. It is August 21, 2022. This is the Iron Abacus. We'll be covering some crypto, some commodities, and some currencies.
Trading foreign exchange on margin carries a high level of risk, and may not be suitable for all investors. Past performance is not indicative of future results. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading, and seek advice from an independent financial advisor if you have any doubts. Iron Abacus FX is not a financial advice firm. The content provided is strictly for entertainment and educational purposes only.
All right. So we'll be starting off with the house board. So for those of you not familiar with the Iron Abacus, we trade an algorithmic house board called the Abacus house board. And on it, we use very simple algorithms. Our favorite one is called the template. It is based off the stochastic and the 21 and 55 EMAs, showing some confluence. So we're going to go quick over these board now. Typically, we do a economic calendar breakdown first. Just the most important thing coming up this week we're looking for is the commentary from Federal Reserve Jay Powell. I believe it is on Friday. Yep. Throughout the rest of the week is pretty light. We're just gonna get some regular stuff that the geeks would debate. But us as Forex traders, we don't really have too much to move the market, so we stick to our algorithms. This week we'll be focusing on a lot of templates. We might be getting some pullback on these templates, so I'm gonna breeze over the house board setup and how it breaks down. So for instance, this is the 21. It is the white dotted, and then the 55 EMAs. It is the purple solid. And then I had the stochastic set to a 533 rhythm, so I get a nice confluence. Now I'm typically looking for when the oscillator is above overbought or oversold or under oversold, and is in confluence with the EMA direction. So that gives me a good entry. Now this should be a little tighter here. Now this is the 1 hour charts that we are trading. Now taking a quick glance over the 1 hour charts, I can see that there's going to be a lot of pulling back to the 21 EMA and a lot of pairs. The dollar might be in for a little rollover to the downside this week here. So you can expect the euro dollar probably to pop back higher. Pound dollar popping higher. Aussie dollar might be popping a little higher also, along with the Kiwi dollar. So we might get a dollar rollover this week, especially after Jay Powell commentary. The euro is looking pretty weak. Has all of these pairs against it, minus the yen is about to roll over. Everything is bearish. The CAD is looking pretty strong, along with oil prices. They might get a little rally to the top side, so that's going to keep pushing these CAD pairs down as the CAD keeps rolling higher. And looking at the Frankie pairs, the Frankie is pretty mixed. It's only weak against the dollar. It's strong against the Kiwi, strong against the Aussie, strong against the pound, strong against the euro. Same deal with the yen. The yen seems to be rolling over to the strong side, as a lot of these pairs seem to be stalling and not making newer highs. Other than the USD JPY, which could go a little higher, but it's running into a lot of sell pressure here, as you can see where these drops began. So we probably have a lot of orders just sitting there. It might push higher, accumulate before dropping back down this week. That is the Abacus house board. Again, we'll be trading just templates. That's all we look for. This type of confluence right here. is what we look for in this chart. And that is the 1 hour chart. Now, that on the side, you'll see a lot of those coming off on the Twitter, the Iron Abacus house, and there's also the Iron Abacus for the fundamentals. But we're gonna focus now over onto our trading view charts and break down more details. All right, so this is pure technicals. We'll be using support and resistance channels. Um, and yeah, just mostly support and resistance methodologies that I use to analyze here. I also like to use the daily chart as it gives me a grander view. I like a macro view. Now, when trading, actually trading, you always want the macro view first, and then that tells you to go, what direction you're going to do depending on your strategy. In this case, like if you're looking for a template, and once we get the template signal, we would drop down to a lower time frame and either repeat the pattern or just pull the trigger when things are looking good enough for us to enter. So you want the upper time frame signal, lower time frame entry. So we're going to start off our analysis with the dollar index. Uh, it did peak out a few weeks ago and then pull back. Last week was an up week for it. It rallied all 5 days. You can see here had a nice 1, 2, 3, 4, 5, 6. Pretty much a full 1 week rally, taking out a lot of suckers. I don't know how he did it. But we might be seeing some selling now as the oscillator has entered oversold. And of course, we're peaking up away from the 21 EMA. So there's always a peak away from the 21 EMA and then a pullback to the 21 EMA. And this is what we may be seeing in the dollar index. This coincides with what we're seeing on the other pairs as they are also opening low, and low open usually leads to a high swing before we continue lower during the week. So we could see a pullback up until Wednesday in this pair. Here, this will bring us back to at least the 21 EMA or the top of this Fibonacci there level, which is 107.209. Now, let's take a quick look at the US 30. So we did have, I did refresh a little wave count here, but we did have this call coming off of this COVID level that would push us back to the top here, and we're definitely in it now. We're in a double resistance, so we have some falling resistance channel, and we have a Fibonacci level here. Now, EMAs are bullish, we are on the daily, but price seems to be stalling after rallying, and mind you, against the dollar for the last few days too. But we seem to peak out with a 5 wave count. Now we could be seeing some correction here as we consolidate here before continuing higher. So expect at least a 1 week or 2 week consolidation, especially going into J Powell. You might see some liquidity dry up and things just consolidate lower as it just settles and pops up. If we do get a break below, then we're definitely going to be traveling down to this falling support area down here. So let me go into a wider view of the US 30 here. This is the macro view we're seeing. This is some Fibonacci resistance we're at right now. And we've seen a high open, could swing us down. So usually the stock market will swing in contrast to the dollar index. We seen some correlations last week, but let's see what happens on this open here. My bet is that it will consolidate high and then continue on to make a new higher high. But if economic data continues to get weak, then we might see the spillover. As there is a lot of companies are doing a lot of layoffs and stuff to try to save their profits. We'll see what happens. All right, let's take a quick look at gold. So gold, we did have a top out at the top there. We did have a double top. Now we're seeing some consolidation between these two rising support channels, but the EMAs are bearish. That we did just come off a bearish template here on the daily, so we could be seeing more downtrend. Maybe another retouch of this Fibonacci level here, support level of 16K, 1600, sorry, a troy ounce. Let's see, silver, same story pretty much. Oil prices. Now we are bearish on the daily, but we are straddling some resistance levels, some Fibonacci resistance levels on Brent crude, and WTI should be about the same story. Just about, yeah, we are bearish on the EMAs, but we are at support. So you can expect that to probably hold and roll over higher. We This has proven to be a pretty efficient jump line every month. Um, Sadly, I have not been reading my oil report, so I cannot give you any more details. What is OPEC and the EIA doing? What reserves has been? But we can only assume that with China slowing down, that could point to a drop in demand somewhat. If they continue locking down, we'll see. All right, but that's gold. We're only going to focus on the technicals here. So we are at support. It is some good buying. If you want to buy this, you want to drop down to a lower time frame and execute that trade. Um, the rest of the commodity space, we did see a steep pullback. For instance, in the price of sugar, we've seen a pullback after hitting resistance twice. Price of wheat has seen a steep pullback. Uh, Coppers, also a drop in prices. Corn has been kind of straddling pretty high, but it's still pulled back along with the rest of the market. So did soybean, but not too much of a pullback there. This is right here, platinum. Platinum just broke out of that uptrend. Well, not just. It's been. We're gonna delete that there. Okay. Lumber prices should be lower too because we're not in fire season, and voila, awesome. All right, so that's for that space. If you're looking at the yields, you should be seeing some pullback over the yields too. This coincides with a weaker dollar too, or weaker currency in some cases. At least the US 10. If we start to see more of a pullback, we could definitely see a weaker dollar coming to the market, which is what the Feds are trying to do, raising their rates. Fuck everything up. All right, let's hop on over to the crypto markets. Cryptology. All right, this is Bitcoin. We did reshape our map, our charts a little bit here. I kept my support and resistance levels. I decided to channel out a little bit more as we're looking for more of a structure in these charts here. So this is kind of what we're looking at for this pair here. Let's change this up a bit. Awesome. But yeah, so what we're seeing is some consolidation right now before a possible push back down, another leg down. And we see another leg down. We're pointing at support, hitting at about 13K a coin. This is on Bitcoin. So we are waiting to see if we hit the edge here of this falling resistance. And just like the other pairs that toppled out, this one might hold a little longer. We'll see if we continue to hold above 27K, we could see more bullishness to the top. But I think it's going to follow the rest of the markets and just kiss that lower level there, that 13K, 14K, possibly consolidate, beat this low, this falling resistance here, top out a little higher. But 13K is definitely looking like it's in the window over for the next month or the next 2 or 3 months, at least into October, if these levels do not hold now. But yeah, yep, strong support there at 13K, 14K. That's my call there. This is just consolidation before we drop down another level, until we beat these highs here that we're starting to print now. I need to label them. Soon as this breaks here, I'll label the next low, which is here. And we got one. Let's move it down. There, boom. Perfect. And that's Bitcoin. So Ethereum is kind of the same, but I did up a wave count on it. I'm still doing the same thing where I'm tracking support and resistance. These extra lines here are Fibonacci time zone. So what I'm doing is that I am applying fit tools to each individual wave or each cycle to find when the confluence is for any specific cycle occurs. So here we're seeing confluence for a couple of waves, uh, down waves and up waves here at this point down here. And that price is actually negative 600. I know Ethereum maxis don't want to hear shit like that, but that's just the wave count. Don't blame me, bro. Blame the waves. So yeah, we could see a swing down, up, and another swing down. and up. Can crypto trade in the negative? Of course it can. These algos ain't got no love. But that's if these current levels do not hold. So we're looking at strong support at 13K for Ethereum. Next support will be 920. So if the current prices of 17K to 16K don't hold throughout the week, and we do see this resistance here take prevalence, then we could see a kiss of 13K. If 13K does not hold, you'll see a kiss up 900. If 900 to 800 does not hold, a kiss up 400 is definitely possible. And by this time, we're looking at some confluence of cycles here. So this is exciting times, I guess, right? Um, for the Ethereum community, we have a lot of development going through, but if you know the market's developments usually just lead to more sell-off because that was weird. The market just hates people like that. And yeah, you could definitely see these levels get kissed. Now, if these levels that we are at now actually do hold, then what would be the top side resistance for these pairs here? We're definitely looking to touch up 36K. So yeah, 36K a coin. 3,600. Sorry, not 36K. Whoa, you wish. 3,600 a coin here. That's if, of course, these 1,600 levels and 2,000 levels hold. If they don't, then you see a kiss of that 900 levels that we spoke about earlier. That's, of course, if structural resistance gets broken. And usually structural resistance is very structural. All right, we're going to breeze on down through XRP. You can probably see exactly what we're looking at here. We were expecting a touch of this rising support, and it seems to be holding. This is falling resistance. This is pretty sharp. But you might see another leg down as it follows the greater market movements. If we do see another leg down, then you'll be seeing about 10 cent a coin here on this XRP. Solana, same deal. So the rest of the market is pretty much following the theme laid out by Bitcoin. Now let's take a quick look at the DAG, Constellation Network, and what we have cooking. So on the 4 hour, it did roll over to the downside after touching our projected resistance. And now we're seeing a pullback 1 and a pullback 2, touch of resistance, and possibly a fall lower down into the 0.302 zone. That's if, of course, 0.6 and 0.8 break and continue to hold. But if they do break and if we follow the rest of the market, the projected market movements that has been happening, then we will see a further dip in this currency here, this index coin. So DAG does represent the index of the Constellation Network, which consists of several coins in there. One of them being LTX, which we're looking at right now. We did have a touch of resistance there that we were projecting before. We had a level that we were projecting to touch, and we did get it. But now we're seeing a sharp pullback along with the rest of the market for this pair. That's fine. We do have a lot of confluence support. Resistance did break, so you can expect it actually now to act as rollover support. And if we don't get a sharper pullback here, which will touch us back down to 2 cents, we'll just hold in this level. We do have a lot of rising technical support that we're above. And hoping it holds because it will push you back up into at least 8 cents a coin. Beyond that, you have $1 a coin, the 1.02 a coin for resistance. Right now, support is holding hard at 0.4. With 0.5, of course, that zone here is just a lot of buying, technical buying going on. So expect to move up. That is Latix Exchange. This is AD, same story. Jam, not much movement there, but I think if we drop down to like a 4 hour, or hold on, yeah, just about the same. All right, now let's hop on over to some of the other infamous cryptos. We're doing great on time today, by the way. I'm breezing through. What happens when you drink 2 Red Bulls, drink 2 coffees, or 3? I don't know. I lost count. Somebody tell me. All right, it is Doge that we are looking at here. Good old Doge. Elon, pump me, baby, pump me. I need at least yeah, let's get it back to 46, 47 cents. I need that, Elon. Somebody pass us along. Tell them we need that right now. All right, so we're looking at Doge here, and the EMAs have rolled over bullish, but it looks pretty weak. And again, we're going to be following the rest of the market trends here. So that's more of what we can expect. Let's get rid of this falling resistance level here. So not really supporting anything. This call here, I'm not sure if it might happen now. If we do see a fall, where could we see price settle at, right? Well, there's nothing to hold it down here. It could go as low as, I mean, falling support. We could use some Fibonacci here. Let's do here. Let's do this. Let's do this. Do apply some Fibonacci extensions and try to find where possible support could be. Okay. Okay. So possible support extensioning would be at 0.02 cents a coin on Doge. That's if current levels. If we follow the greater market right now, and we can see a dip lower, then we can go that as low as we can go on this coin here. That is, of course, using some Fibonacci to find those levels out. Beyond that, it could be, holy hell water. Come on, guys, burn your tokens. I really the only one left. Anyway, resistance is coming in hard at 0.07. Support is coming in hard at 0.04. That is a 3 cent spread. 3 cent. Is that 300 pips or something? How does crypto do it? Not sure. But we're looking at consolidation and resistance. So bearish, pushing down to the next level, which would be 0.02. That's if we follow the rest of the market. Litecoin, same deal. I don't know where my joins went. AVA breaking above falling resistance there, holding at support. Projected upside 149. Projected downside hold is at 63. Beyond that, you'll see support coming in at 22 and 25. How go? How low can you go? Well, parity lows you can go here 0.09. All right, that's Uniswap again, a little lower there. All right, let's do some currencies now for our last about 10 minutes or so. So we are keeping these episodes to about uh, 30 minutes. The war room. We want to just brush you up on our yeah, a little bit on the calendar, but more on the charts. All right, stepping into the currencies. Remember, we're expecting dollar to pull back a little bit after opening so high. But that doesn't mean that we won't see further momentum carry into the week because it is very data dependent. So we're going to start with the euro dollar here. If you can see, I changed up the charts a little bit, cleaned up a couple of cycles. I'll be doing that over the next few weeks. I'm actually going to publish it also on TradingView, so you can get the link off of the Twitter and follow along the chart as I update it. All right. We are holding strong. We're about to hit parity. There's no doubt about it. This is the $1 here. We did go below parity up to 97, 99. There was a lot of calls that it would go as high as 102 even or 107. It has not occurred as that resistance has held pretty hard. We are looking at the dailies. 21 and the 55 EMA are bearish. We came off some type of triple top here. As you can see, the divergence between the tops of prices and the drops of the stochastic here. It's not looking pretty good for this pair. As yeah, we could see sub parity here. So what will be the lowest we can kiss here at this price? We're looking at support beyond this at 0.98 cents. So that's about 200 or 300 pips lower that we can travel here in this pair before we see some good bullishness. And by good bullishness, I mean this is some long-term bullishness that's waiting here to go long with that 0.98, 0.97. Did we go to 96? Yep, 96. So it's a good little cushioning there for the bulls to hop in. But right now we are looking at some bearish EMAs. They are extremely bearish, pretty wide too. The stochastic has rolled over. Also, that's for the weekly and the daily. So, ooh, bearish, bearish, bearish on euro dollar here. Pound dollar, we kind of expected some popping from last week, but didn't hold much as the economy over there is what are they doing? All right. But this is the pound dollar and what we're looking at. Support is not holding. We just broke below it. And it seems like we're going to celebrate even further. Stochastic is also pointing down. So we can see more downside in this pair. Aussie dollar, we did see some vicious pop up as commodity prices were experiencing a little bull rally, but also the central bank raised up their rates, which helped put some bullishness into this. But now we're seeing a drop. But let's get rid of this arrow here. And now we are at support. So what we could see here is some possible bullishness in this pair. Good for buying, even though EMAs are pretty bearish. They're not that wide in bearishness just yet. And support here could hold. But just like the pound dollar, if we do get a push below where we could see some more lows in this pair here, how low can we go? The question everybody wants to know. 0.66 seems to be where the bulls are resting. We also have this falling support here, and hopefully once it meets falling horizontal support, it will change things up from this point, push it on up. That would be great. Point to point. Let's see. We can hope, right? We can speculate. But if anything, you want to stay bearish on this pair as the EMAs are also bearish. What we're looking for though here is actually some Fibonacci levels. Let's go over here. We're going to go from the bottom of the flash crash to the top of the pre-COVID. Well, we touched Fibonacci. We're going to touch again. We're touching Fibonacci and structural support. Not sure how strong these levels are going to be, but this is what you're looking at. Swing up, swing high, swing down, swing high. If we do get a higher high off of, whoa, come back. If we do get a higher high off of here, then we can see more high swinging. But looks right now, it looks like it just broke this low here, and we can continue to see some low into this confluence support level. That's the Aussie dollar. Kiwi dollar, probably same story, just about. Yep. EMAs are still bearish, pointing down. Dollar Kiwi, dollar yen, still straddling high. We could see some more resistance kick in this week, hopefully, kick us down to the bottom. Let's skip on down to, how much we got? Lots of time. Let's skip on down to another major here, USD Frankie, opening high with EMAs pointing low. It is opening high on the daily template, so this is some sell category here. This is a sell pattern. Get ready to sell it. Bum, bum, bum. That's what I would look for. All right. Aussie Frankie bearish. Pound Frankie bearish. CAD Frankie bearish. USD CAD semi bullish. We are straddling against. Looks like we just had a good wave down, and we're doing a complex correction, and then we can see another leg down this pair. There's a lot of people looking for. But right now we are pretty bullish on the EMAs, the technicals, even though we are resistance. We are opening high. We can see a pullback, possibly more consolidation in the mid into this little midsection here. This consolidating wedge. Euro CAD, bearish. Pound CAD, bearish. All right, let's do a quick Scipio. Aussie CAD, gold versus oil. We did have a swing that we were expecting. We are opening low. We could see a swing to the top side here again on this pair. We are at some vicious support here, structural, Fibonacci. There is some forming resistance here. Let's get rid of this real quick. Let me get rid of this. I'm going to have to do a little drawing here. I haven't really been updating too many of these charts. I tend to breeze through them as I let the algorithm mostly just tell me when to hop in. Mostly the Aussie, Euro Aussie bearish, Pound Aussie bearish, Kiwi Aussie bearish, Pound Kiwi bearish, Aussie Kiwi. It's pretty bullish, but it's opening high. But it looks like it's going to keep trending on up. I did slap on this supporting resistance. I was at a lower time frame trying to scalp an entry. It's good for scalping. I like it. All right, let's skip on down to some other odd or exotic gems. USD Mexican peso. Had some dude on Twitter harassing me. It's not gonna get down. It's not gonna go down. It went down. Okay. When it was down here, he was nowhere to be found. Popped up when it was here. I said his ass straight when it was here. Hasn't said nothing since. I'm gonna wait till we're back down here. Then I'm gonna tweet him again. All right, this is the USD Mexican. The EMAs have rolled over bearish. Stochastic is actually pointing up, so we could see a little bit more consolidating to this falling resistance zone here, which already has been broken once, and we can see another break of it. Turkish lira, opening high. looking like it's good for some selling pretty good soon. And it also pays a high carry trade, high rollover rate. But I would definitely probably wait till I get some more bearishness on the smaller time frames. Like, yeah, no, this is looking, ugh, I don't know what that's looking like. But yeah, I'll definitely be looking for some sells there soon. Russian ruble popped up, popped down, won the war, came back, and now it's holding steady. USD Chinese renminbi, yeah, 1. This is the daily. This is a vicious looking chart. Like I don't even bother trading it. I just let the algo trade it too. When I look at it on the 1 hour, um, I just came off of some buys, and now it's looking like it's gonna go into a buy zone again. But yeah, down, 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 down. All right. And I think that will bring us to an end of our war room for the week. I hope these charts help you out. Hope you got a little better understanding on support and resistance, Fibonacci levels, and wave counts, which are some of the things we use. Feel free to get at me on Twitter, ask questions, or hop into the Discord and chill out, see some more of the fundamentals that the Iron Advocate tends to focus on. So, with that being said, be sure to give me a subscribe and a like there. Help me out, get this channel off the ground. Also, feel free to follow us on Twitter and or jump into the Discord. Uh, the Iron Advocates Twitters are strictly business or strictly news, data. There's no partisanship bickering, other than my personal, but my personal is personal. And also the Discord is all business and casual attitudes. There are not too much socialness in there, but there is a lot of good data and information. I'm also continue to build out this universe. I am the Iron Clerk. This is the Iron Advocates. Thank you for tuning in and watching.